freedom isn't the result of wealth. It's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and I'm here with Adam Penn. Adam, how are you?
I'm doing great today. I'm excited to interview Robby.
I'm excited to interview Robby too. I don't know, I think you've known him longer than I have, but we both, or all three of us, met through the same mastermind group and everything, and been on trips together and done some stuff. And Robby's a great guy.
Yeah, he's got an interesting past, right? So he's gone from philanthropy, raising money for really just for donations, to raising money for syndications through him. I think he started by doing them with himself, and then he started raising money for Y Street, and then he's now the managing director of Y Street Capital. And we'll go a little bit into that story and how that all came to be, but real great guy, cares a lot about people, really has a good background on understanding the finance side of things, and he's really good at sales. That's something me and him have spent a lot of time at, and not in a used car salesman type of thing, but understanding the questions to ask and doing things of that nature, so you understand the person you're talking to.
Yeah, that's one of the things that I think made him or makes him a good capital raiser. But definitely an interesting guy. I mean, especially for just the breadth of experience that he's had now, given his age, is impressive. So I'm excited to have him on here. Well, all right, let's jump into the interview.
Robby, excited to have you here. Obviously, we've known each other for a little while, but I think what we want to start off with here is maybe you telling people a little bit about your background, how we met, why you're here, why you're in the space that you're in now, and then I've got some kind of probing questions even around your background and stuff if you don't cover it. But do you want to just kick it off with a little bit about you?
I'll try the fast version. It's great to see both of you. Glad to be here. So 10 years ago, I started to have the first inklings of interest in wealth building. I was still in college, but had grown up playing cash flow, had all the books on the shelf that people typically know, beginning with Rich Dad, Poor Dad and The Richest Man in Babylon, all the way through. But as I left college, found a love for the philanthropic space, and that's where I began my career. And there's a backstory to that as well, but began raising money for philanthropy, traveled all over the nation, and loved it. I never thought I would leave. But the entrepreneurial spark was just flicking along, waiting for the right mixture of fuel and oxygen to really explode. And that happened somewhere around 2021 or 2022. I'd started purchasing a little real estate with some additional capital I had, done some value add apartments, and loved it. And also built up enough equity. I think I built up enough equity in 1 year to duplicate my salary from the job that I loved. And I said, this is amazing. How do I do a little more of this? And that started the exploration about building more entrepreneurial streams of income, building my business credibility. Went full-time in 2023, had a partner in a construction company to make some more cash flow while we continued to think through how do we grow our real estate portfolio. My capital raising experience from nonprofits helped, but I also realized I didn't know everything, and so joined Y Street Capital in 2023 on the other end of the year, at the end of the year, to go and have more partners available to build up my experience. That has led me to today, where I'm managing director of that business. Got 5 great partners. I'm over the majority of the company and have a capital raising function as well. And we develop raw land, multifamily, self-storage, and do a little bit of land plays as well, horizontal and such.
I think something that would be really interesting is we've talked a little bit in the past on the show about being part of mastermind groups or going to conferences and kind of like learning more, getting more on the education side, right? Not just going out and learning everything on YouTube or just assuming you learned everything in college. And I think what would be really interesting is maybe tell us the story of how you got your current job, because wasn't it in a buffet line?
You bet. So although the buffet line really led into further conversations, but I happened to be standing in front of Victor Menashe, the senior partner at Y Street Capital. Had no idea who he was, hadn't done enough research on the conference. We were in Belize, and I turned around and we started chatting. He asked me where I was from, and I said, St. Louis, what do you think of that market? That's where I had, I think, 12 units at the time, all of them value add. They were going great. And he said, I wouldn't touch it, would never put a dollar there. And I was like, well, forget that guy. Like, that's not a very polite thing to say. And he obviously doesn't know what I know. Later, I find out he's a savant. He knows everything about every real estate market in the United States and several in Canada as well. And he's presenting on stage, and I'm going, oh, that was the guy that told me that he wouldn't touch St. Louis, and I dismissed it. And so years later, my respect for him had grown. I had multiple factors, and I approached him saying, I think I can help your business with some of my skill set. And he agreed, and that's where the job came. So it did take a little while, but I do remember going, well, this conversation isn't going far. He's not going to like my story of buying my multifamily apartments and value adding them in St. Louis.
Yeah, super interesting. So, I mean, just kind of the connections you've made have brought you to really being, you said, one of the managing partners at Y Street, which is quite a stretch from thinking the guy's an idiot in a buffet line.
I didn't use the idiot word, but
No.
but
I added
you
that.
are
Sorry.
right. Yep.
Difference of opinions.
Very, very much. And I remember asking, same conference, I remember asking Brad Sumrock what he thought of Ocala as a Florida market. And he goes, you gotta tell me more. Like, in what sector, in what asset class? Are we talking 100 unit multifamily? Because I would never do that in Ocala, but what else do you want to know? And I said, okay, I have to ask better questions here. I have something to learn.
Yep, that's awesome. So another kind of question I have that I think it stems between your original work in almost the charity space, right, where you're going in and raising money more for a charitable cause, to raising money for investment. And they both almost have a trust-based aspect to them. And I want to talk a little bit about how you've gone through and kind of what your path was maybe internally, kind of going from, it was more of a religious-based company you were working for before, right? But then you have to take that same almost faith-based approach that people have, like, hey, I'm going to go give you this money and you're going to operate in good faith with it, basically giving it away from the charity standpoint, to now, okay, you're going to take the money and you're hoping to give them more. It should come back with friends, right? You know, give you $100 and it should come back with 100 and some more friends along with it. So how does that paradigm kind of shift when you go from just asking for donations to, hey, give me a donation and hopefully I'll give you some back?
I think the first thing that I often think of when I reflect back on it is, wow, raising for nonprofits is so much more challenging because the pool is smaller of people who are truly philanthropic people who are giving with no intention of receiving besides the good feelings they get from doing that. That is much more challenging. And I remember people telling me, oh, you have a hard job. You know, you travel around, you talk to these people. And I was like, no, it's not that bad. But I also wasn't that good at that point either. So that is a bit of a paradigm shift as well, as you emerge into the real world further and further, and you go, wow, there's a lot more I can do. The ceiling is a lot higher than I knew. So that's the first piece, is when you're working in the philanthropic space, you are digging so deep into the relationship so that when that person is ready to do something, I mean, they're doing it with tears in their eyes. And that's a whole different thing. Like, nobody's crying over our raw land development. They're excited perhaps at times, but most of it is transactional to a different degree. You don't want it to be that way. You want to be deep with them, but it's just a different thing because you do have an obligation on the back end that is financial in nature. So the metrics are there.
Very interesting. So one thing that I'd like to know maybe a little bit more about, Robby, is taking that shift from, obviously you're still on the active side, right? Because you're raising money, you're helping run a syndication business, a development business. I think you guys do some forms of property management, no? Do you?
Only for assets that we've developed, yes.
Yeah. But stuff that there's a lot of moving parts inside of Y Street. So how does that differ, and what was that change going from buying your own apartment building to having a team? And I think that can relate to a lot of our listeners that are looking to go get a team, right? Whether or not that's through a syndicator or use a property manager, go buy a set of properties. It's different when you're just working by yourself with one asset, maybe one single family home, versus a larger set of properties, a bigger team, and so on.
Seeing through a business fully is very challenging and takes a lot of time. And I think that was the main difference to me is when it was just me, you can see through everything because there's not that much to look at. Oh, we're super weak at bookkeeping because I don't know how to use QuickBooks. You see right through that immediately. Or you go and hire one person who's doing the bookkeeping, as we did, and then you see, okay, either they're doing it or they're not doing it. And then every year you find out, were there miscategorized transactions? What's our NOI like? Very simple visibility. When you're looking for a team, especially for, let's say, the passive investor grading a syndicator, very challenging to see all the way through a business without a lot of experience in business and some willingness for the syndicator to go open kimono and share things that are going on in the business. Like, what's the cash account? Is there is this business bleeding money and you have to do deals to survive? That is sadly a more prevalent situation than most realize. And to see through that takes a lot of time. And most people will never realize that. So that's a big shift to realize, okay, if you're going to join a team, you're going to be a part of a team, you're going to be a limited partner, you want to see through that business. But my gosh, you might have to be super patient. And that's a life lesson that I've learned now way too many times and probably am not done learning.
I think something, especially around a lot of our conversations and the stuff we try to focus on, obviously it's around investment, but it's also freedom focused, right? And so looking at how do you build the lifestyle you want? And obviously, if you had all the money in the world, then maybe you would have kept raising money for charity, but you're even in the same way here, you're able to go create returns for someone and then they can go donate some of that to charity. So maybe talk a little bit about how these types of syndications or just kind of some of your path and the reasons you made certain choices, moving maybe out of smaller assets into larger assets or working with larger teams, about how you did that from a lifestyle perspective of what you were trying to deal with, right? Not going and pulling wire on a Saturday morning, which we've had some calls on a Saturday morning where he said, I can't talk, I'm pulling wire.
Yep. You all did an episode a couple of weeks ago about goal setting and visioneering. And that's an area of my life that I'm doing a lot of work on because I don't find myself to be a very natural visionary, somebody who goes, this is what's going to happen 30 and 50 and 75 and 150 years from now. So I'm doing a lot of work on that. And I realized as I was growing up, as I stepped out into entrepreneurship, that I had much more visioneering to do. And I had to do that in order to have any chance of accomplishing anything, period. Like, no negotiables. You have to do that type of work. And so I realized along the way, one of my visions is to be a very good businessman. And you can't just be a very good businessman if you're only a passive investor. And of course, you could, but a real business person is working with the machine. They're in the machine as well as working on the machine. And to use the classic analogy, like, are you working on your business or are you working in your business? Well, businessman is doing both to some degree at some scale. And so I realized, because there was a moment in, I would guess, 2020, where I was saying, I just want to be a passive investor. I'll keep raising philanthropic dollars. I love that. And I will just passively invest. I remember saying those words. I remember where I was.
Sell everything and invest in T-bills.
Why not?
It's passive.
Exactly. And the reason why not is because I realized I had a greater vision for my business experience than what that would allow me. So to answer your question, I'd say all of this boils back to someone's vision for their life. If they want to be a pure passive, are they prepared to up the deal flow to 300 deals a year and look really seriously at all of them? Because then you can be passive because you've made a very good passive choice because you've done a lot of work to choose. If you want to be a business person, yeah, you've got to get your hands dirty sometimes. That's business. And all of the joys and the struggles that come with it, part of the character development of a person.
I think something that you could provide a really interesting insight to, due to the amount of work you've done with Y Street and really just raising capital in general, is around some of your experience with larger family offices. And you've worked with a lot of passive investors and you've worked with some really sophisticated ones. I'm sure you've worked with some not so sophisticated ones. We don't need to dive into those, but some of the family offices, right, they don't just write a check. They're very sophisticated investors. They take a long time to build a relationship. And they can maybe get a little more nitty gritty. If they're going to write you a $5 million check, then you might allow a $25,000 investor to get nitty gritty. And that's not to say that you're not transparent with both of them, but there was a cost benefit to the business to be able to go through a due diligence process with someone. And so maybe thinking through how some family offices will do due diligence on a syndicator. Talk a little bit about some of the things that, with your experience, you would look for or look into if you were going to analyze a syndicator that you were going to go do business with. I think the thing you just said was super interesting, the operating cash of the business itself, the syndication company, right? No passive investor has ever asked me how much money does Bidwell Capital have, right? They want to know about the reserve accounts of the deal or any of that. They don't want to know if my bills are paid.
So I've been asked that by less than 5 investors ever. But when I've been asked them, I'm like, all righty, like now we're playing ball. Like this is a real quality due diligence process. Even from someone who may not know that, they know enough to ask that, so they're going to get the answer. And I say, okay, here are our goals, here's where it sits, and it's a fascinating piece. You're asking about family offices, and the same thing occurs in philanthropy as it does in regular capital markets, where people sometimes give test gifts. They make test investments. They go, okay, what's the minimum? I'm going to come in at that level, and I'm going to see what you do with it, and we'll revisit this in 3 years, 5 years, whatever the deal timeline is. And that has a lot to it. To think about going slow, starting small, is another piece of that patience that I mentioned earlier. And family offices are typically very patient. So they're not going to say, my gosh, I loved my conversation with Dustin. I better invest everything I got because I loved my first conversation with him. They're naturally patient by design. Now, that is interesting because the industry itself is not as patient as it would outline because most family offices don't last as long as they should. The typical family office does not last longer than 15 years.
Really?
Really.
That's surprising.
So the ones that you know about are the ones that are the exceptions to the rule, that they don't last more than 15 years. Same thing as most businesses. Is it a 5-year timeline? 90% of businesses fail. It's the same issue with family offices. They realize this just costs money, and I don't want to spend this money on this business. So they close it down after a certain time frame, typically less than a generation. But the thing that I've found really interesting, you asked about typical questions. We will give a lot of access. Someone will be able to come and join an asset management meeting of a different asset and they can see. But even that causes tension in our business because we go, man, this is not a sales process anymore. Now they're inside. And if we say something, we're going to have to explain it. And it's going to take a long time to explain. Like, why did we throw out this partner 3 years ago and we still talk about it because of the lessons learned? But like now they're inside and getting that visibility. And that can be very good because it can lead to a really serious relationship, but it also can make it take even longer, which goes back to the patience approach. And patience is hard in business.
So, and I think you've answered a handful of it, but is there anything specific that you would look for if you were vetting a new syndicator?
No, thank you for asking it again. I would look for what's the temperament of that person under stress over time. Here's an example. I watched a person in St. Louis drive over the curb and hop the curb in order to get into a gas station parking lot. And I had this fascinating thought that I would never invest with someone who I watched hop the curb with their car in order to get into the gas station parking lot. That is a flagrant denial of something. I don't know what was really going on, but I was like, that is someone I would never invest with. I think they were driving a Range Rover. And I was like, X all over that person. So I would look at, okay, like what's going on in the person's personal life? If they're like the head of a small team, 4 people underneath them, I would go, is there a pending emotional explosion in this business? I would dig into those types of things. And that's really hard to learn. And it takes time. So you're going to miss the first 3 deals they do because you're trying to unpack that. But I think like so many times we've heard stories of like people hitting rock bottom and their business turning around after that. But I'm like, I don't want to invest before the rock bottom because that rock bottom is going to be really bad. And that's a really challenging piece. And I would prefer to invest either after the rock bottom moments or on a long enough time frame where the rock bottom moments can be covered.
Dustin, what you got?
Yeah, I'm curious. You guys are involved in a lot, right? You're not sort of a single. You're not, well, we only do multifamily or we only do self storage. So you guys see a lot. You see a lot of different things. You also talk to a lot of investors. You guys have a large investor base, and I'm kind of curious. Like, this is a two-part question. What are you hearing from investors? What are investors kind of looking for right now? And then where do you guys see opportunities in the broader investment, the broader real estate space right now?
I think most investors are confused by what they're hearing from the pref equity world, from the not a lot of mezz debt is what people are looking at, but they're confused by the capital stack because they know they're hearing these things like, oh, like, is there pref equity in this deal and could I invest there? I go, no, and I know you heard that because of something you heard somewhere else, and so you're bringing that into this concept, but like, if that was a part of the capital stack, we would have showed you it, because if we didn't, illegal, problem, red flag, like we're in trouble for ignoring that. So there's a lot of confusion still. And people who are actually, the Wall Street Journal wrote recently that Trump euphoria is wearing off, and some of the bankers are looking at February and going like, well, January wasn't that great. What's going on? So apolitical comment coming up. I do think there's still confusion in the capital markets, and that makes people sit back. They're excited, but they don't know why, so they don't know what they're excited about yet. And the additional complexities of what's going on with the pref equity pieces and foreclosures, which are again, like the 2024 tidal wave of foreclosures didn't quite happen because of extended pretend. So now 2025, well, are we reaching the new deadline that's now going to be a harder deadline? We don't know. So the confusion is still really prevalent, and that's showing up. And it's showing up because people don't have their own clear vision, so they're looking for other people's visions to copy in. I do think the most disciplined investors are doing the same thing over and over. So you asked about what opportunities we see. We are realizing our raw land purchases look as good as ever, but the exit piece is going to be more challenging because more home builders are also, they're sensitive. More, if we just do the entitlement, or if we just do the horizontals and we're going to exit to someone else who's going to build the product, more construction people are uncertain about their employee pipeline. Are they going to have the resources? Are they going to have the personnel to go build new products? So that concern is there. So from our perspective as developers, we like finding the raw land, but we know, oh my gosh, but the exit is less clear now, even though the raw land opportunity is just as good as ever. So it's unique to us, but it's a hard time. I mean, all of us are looking at each other here. We will be happier people a decade from now for this experience.
For sure. No, and I guess that leads into another question that I had just around, you talked earlier about goal setting, and you just kind of referenced it there about people trying to latch onto someone else's vision. And that's something that I say fairly often in my newsletter is you've got to know what your investment objectives are, which, Robby, you won't be receiving that anymore since you've now unsubscribed. Have to razz you about that. But I talk about that often because I think if there's I'm going to butcher this now, the proverb about, without vision the people perish, or something like that. And I mean, I think that's very, very true, where if you don't know what you're trying to invest in, and you just start going out looking to invest in random things, if it's not aligned with where you want to be, then it can, an otherwise good investment can be bad for you. And I'm curious if that's something you guys do a lot of development, and that appeals to a different type of investor profile than the folks that are looking for the consistent monthly, quarterly cash flow, right? So can you talk a little bit about that? Like, do you have to do any kind of investor education when you talk to folks about the deals that you guys do, and kind of how that idea of lining up as a passive investor, lining up your vision to the type of deal, making sure that there's strong alignment there?
One of the best things I hear when I'm having that type of conversation with an investor is when they say, I want this money back in 5 years because I'm going to have this change in life, but I don't need it until then. And I go, thank goodness they understand, even if it's dim for them, they understand what will occur in this deal. Long, slow unfolding of an opportunity. And then at the 5-year time period, the 3-year time period, 7-year time period, something's going to happen. Their change in life will align with the exit from this deal, which is where most development actually shows up on someone's balance sheet. So we have to have long conversations with people about that. And we have made mistakes historically with long-term investors that sometimes didn't realize what long-term actually really meant. They said
About
it
6 months.
exactly. They said, you told me it was going to be a long deal. It was going to be 5 years, no cash flow. And I thought I was good for that, but I really just want to drive the passive income piece. I'm like, yeah, again, hindsight being 2020, unfortunately, we cannot go back and prevent that deal from getting done. And so we look for ways to help along the way. I will happily dig into someone's personal portfolio with them. I'll say, hey, tell me your assets, tell me the liabilities here, to figure that stuff out. But an investor ideally is doing that on the front end. And the more you're willing to share, like if you tell me, oh, I've got 4 properties in Chico plus a passive investment in Florida, there's not a security risk to telling me that. What that does for me is helps me to understand, are we really on track for the vision you have? And are we really going to play a beneficial role in it? Or are we just going to be another money sponge that you're not going to be happy about 3 years from now?
Yeah. No, that's awesome. And I think Adam asked the question earlier about red flags or things to look for in a sponsor. And I mean, I'm glad that that's something that you all try to do, right? I think that's the responsible people who raise money always want to make sure that there's that alignment, as opposed to, like you said, a sponge of just soaking in, well, it doesn't matter. If you're willing to write us a check, we'll take it. Like I think that those types of people are not the ones that drive over the curb to get to the gas station, right? That's not the same group of people.
Yeah.
I guess, Adam, I don't know if you've got anything else. I want to ask Robby the question we like to ask all of our guests. We're the Wealth Independence podcast, and independence and freedom, and those words are very deep, emotional type words, right? And I'm curious, like what either one or both, freedom or independence, what those mean to you, and kind of how you manifest that, or what that looks like in how you live your life, how you set your goals, things like that.
When I think about the freedom descriptor, I think about, am I both free to do everything I want to do, and am I applying the responsibility that comes with that? I don't mean to allude to the Spider-Man quote that everyone knows, but the freedom piece comes because freedom can sound like I think the word is licensure, the like ability to do whatever you want, which is not real freedom. Like real freedom also has a compelling experience aligned with it that is motivating. It takes on a moral tone for me, and everything that I think about when I think about freedom is, am I using my freedom to the best ability possible? So for me, the freedom is being free to achieve your full potential, no ceiling on you. And so the words full potential resonate. Like, as Adam knows, it's on all my vision statements for the long run. Like, reaching my full potential is a very compelling thing for me. And that's what freedom really is about. There's not anything inhibiting that full potential, but it also has the obligation to do that. So it's not licensed. It's not, I'm going to go skiing every weekend for the rest of my life and, like leave the kids at home. This is freedom. I have to be free. It's like, what is going to allow me to achieve my full potential, which I have the independence to choose. To weave in your other word, I am independent of other people's beliefs about what I should do, but my freedom also obligates me to have the path clear for reaching my full potential.
There's a handful of people that talk about the freedom from versus the freedom to, right? The freedom from having to work or having to, wake up in the morning to go to a job to get the cash you need to pay for dinner that night, right? Like versus the freedom to reach your full potential, to go ski that week, right? To take your kids on a trip, right? And those are kind of once you have the freedom from something, then you can end up more with the freedom to go do something.
Yeah. I just watched the movie The Family Man with Nicolas Cage. For any business person, I'd highly recommend it because it's classic. Nicolas Cage, hard-driving corporate raider in the 80s or 90s, New York apartment, doesn't care about anyone, and he gets a chance at a glimpse of what it could be like if he had married the high school or college sweetheart of his dreams. And I think I even teared up, and I never tear up. Never.
That's our movie
for at your
recommendation
wedding?
from this episode. That's good stuff. I love that, Robby. No, I think that's probably one of the more unique answers that we've gotten, but I love that. And I think that's a huge, like, yeah, freedom. Yeah. Well, the Spider-Man quote, right? I'm not gonna, but you know, it's trite, but it's also true. You know, people like, I think there's a lot of deep truth behind that as well. And you know, if you are achieving some type of freedom, I think for most people, especially if they're driven, it's not to go sit on a beach, right? It's because there's some type of higher goal that they're trying to achieve. And you do need, as Adam said, you got to get the freedom from certain things to then be able to have the freedom to go do other things. And I think that's, again, it comes back to the vision. Like, what's the end goal? You mentioned your highest potential, or about what was the phrase?
Reaching my full potential.
Full potential. Yep. So yeah, I mean, you have to know that, right? If you don't, or at least if you're not striving towards that, even if you don't know what your full potential is, but you're not striving towards it, then for what is freedom? Like that, it's kind of meaningless. It loses its meaning there.
Big time.
Where feel free to add anything else you want, Robby, but if not, then where can people reach you if they wanted to?
I do a lot of my best public communication on LinkedIn. Love LinkedIn. Spend way too much time on LinkedIn. So follow me there, Robby Butler, Managing Director of Y Street Capital. And if people have questions, my cell phone, 480-387-7879. That's a real number.
And you only take calls at night, right? Between midnight and 4 a.m.?
You've got it. I will not hear that phone if it rings. I have that much freedom, at least.
Perfect.
And Robby, if folks want to connect with Y Street and find out more about the types of deals you guys are doing, what's the best way to do that?
ystreetcapital.com. Very easy. And obviously that LinkedIn path, if you follow me, you'll find us as well.
Okay. Good deal. Well, we appreciate it. Adam, you got anything else?
No, thanks for being here, Robby.
Great to see you both. Love the conversation.
Thanks, Robby.
Well, that was a great interview with Robby. For anyone that wants to reach out to him, obviously you find his contact information. I think he's got a lot of value, even if you just end up talking to him about his past or the stuff that Y Street does. Like Dustin brought up, they do a lot more development, different than what Dustin and I do in some of our stuff, different than the credit fund, which is much more of just a cash flowing investment, monthly distributions compared to, like Robby said, development can be 3, 5, 7, sometimes 10 years until you see any money back. And hopefully it's a much larger check than those monthly checks, but it's a different type of profile that you need to have if that's what you're looking to invest in. And it's definitely for part of your portfolio. Not to say that's the only thing they do, but Robby's got a breadth of experience. He's got a great network. He goes to a lot of conferences, knows a lot of high net worth individuals, really has a good insight into the investing space. So I think it's a valuable person to connect with, and obviously reach out to us if you have questions or anything that we can answer.
Yeah, absolutely. We'll have links to Robby's LinkedIn and to Y Street directly. Y Street, if you're looking for that more long-term type play, they're very, very experienced. He didn't talk too much about their experience and their track record, but their senior partner, Victor's, he kind of referenced that he's somewhat of a savant. The guy's, if you ever get a chance to get around him, he's just crazy smart, very good at doing what they do. And so if that's something, if you got a portion of your capital that would make sense for that more long-term thing, Y Street's, has a good track record and would definitely be worthy of consideration there.
And Victor started in the tech industries too. He started raising capital for semiconductors.
Yep.
So.
Yeah, so super interesting background on them, and the company's grown and they've been able to do a lot, and it's not just like your cookie cutter type development. So definitely, again, even if you're just curious, definitely look into the stuff they're doing, because it's not like, oh, we're doing some build to rent community or something more cookie cutter. I think they do some of that, but they've got some other interesting projects as well. But we appreciate everyone. Like I said, we'll drop all the links to everything in the release notes, and you can check them out. We appreciate everybody tuning in, and look forward to seeing you on the next one. Just remember, where freedom leads, real wealth follows. Thanks, everybody.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice, and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.